Today I wanted to start off by looking at a little graph of the dividends we've been getting recently. So for last month, December, we had about $91 in dividend income. And currently in this month, we have $28.92. So December was definitely a big month, but we're still getting a lot in January, and I hope to grow this and get this average of 35.34 up over time and keep building on my dividends. We're now up to a $24,000 balance, so we've also grown by about $4,000 from the last episode. I wanted to take a look at our comparisons to the S&P 500. So for the last 3 months, we've been doing about 11.66%, which is basically in line with the S&P 500. A little bit below the Dow, but it's pretty consistently keeping up with the S&P 500, which is good, because the thing about this portfolio is that it is a higher dividend version it's like an index of different stocks, but it's higher. It has a higher dividend yield than the S&P 500. So if it keeps up in terms of share price appreciation percent gains, the dividends will outweigh the returns over time and make it so that we actually outperform in the long run through the dividend snowball. For this month, we have about 6.87%, which is beating out the S&P and the Dow, so that was good. Now, taking a look at our individual stocks, I wanted to look at these and go over them. So let's look at the total gain loss. So lowest to highest. We'll first look at Hershey again. I've actually been really happy with Hershey. It's a stock that I put a lot of money into. It's basically the highest individual valued stock in the portfolio. And that's because it's been trading down a lot, and I was trying to take advantage of the fact and get my cost basis down. And I'm really happy with it because it's been starting to turn around recently. And I mean, obviously we don't know for sure, but I really see it as it looks like it's starting to recover, and we can see that in the gains. I was down maybe 10% the last update, and now it's only down to 3.85%, and feels like every day I've been getting closer to just being net even on Hershey. And that will be an important time, because I just the entire time I've had this portfolio, I've always remembered being in the red on Hershey. So seeing that turn to green will be a really cool sort of significant turning point in this portfolio. Next, we have Nike. Nike, I think last time was performing really well. It's sort of come down a little. I mean, I don't expect it to always be going up a ton, and I'm fine with it the way it is. So it just means that this is an opportunity for me to buy in more to Nike, but it's still up 1.81%, and I've just been growing its position, and I'm going to let it compound, and I'm going to let it generate dividends. And hopefully, I think long term, Nike is still a really good stock, and I think it'll grow. It is one of those dividend companies that is pretty high valuation, high PE ratio, it's kind of like Pepsi or Coca-Cola, where it's a very old company that's been around, and it has a history of performing really well, and it just kind of makes it through thick and thin, and does a really good in a lot of different market environments. So it's kind of always going to have a high valuation because of how reliable and how long it's been around. So I think that it makes sense that Nike's coming down a little, because I think that its valuation is still really high. But it's that one of those companies that I want to own no matter what, even if it has a high valuation, because I just think in the long run it will continue to compound and continue to keep growing. And I see it as a really reliable company as well. Next, we have Intercontinental Exchange. I really like this as a financial company that keeps track of data and just monitors different equity values and exchange values. And this is one where I kind of want to have some like financials in this portfolio, because financials are just I just really like the financial sector, and I think that there's a lot of good dividend companies that are financial companies. You can think of like some that are like more in fintech, sort of like MasterCard, Visa, but there's just a lot of like S&P Global is kind of similar to Intercontinental Exchange, stuff like that just deals with financial data, and it also is a dividend company. I feel like that is a very sort of bullish sector, and ICE is a part of that, and it's been growing pretty well. I've up 8%. It still has a smaller current value because it's a newer holding in the account, so I haven't built it up as much as the others, and also it hasn't gone on any sort of dip while I owned it, so I haven't really had a good buying opportunity, but I am slowly adding to this one. It has a pretty good dividend yield. I think it's like somewhere between 1% and 2%, but I think it'll continue growing and compounding, and I really like it. Next we have Carrier. Carrier is a HVAC company dealing with like air conditioning and stuff like that, and I really just am bullish on sort of air conditioning in the long run. I think more and more places are just going to start getting air conditioning, and I think it's just going to be something that is kind of necessary for life going forward. And that's why I have a big position of it in the portfolio, and it's up 4%. So it's pretty much trading a little bit up. I would like to see it get higher, but I mean, now is a good time for me to add to it. So it's fine staying at this prices, and yeah, I just really like this company. Pays a good dividend, just great all around. And next we have Rockwell Automation, which is one of my industrial companies. It's in fact the only industrial company. I just wanted some diversification. I feel like I'm not as knowledgeable about industrial companies, but Rockwell was one I found that just had really good financials, and it just seemed like their company was just headed in the right direction. Like everything I looked at, like revenue, like free cash flow, sort of like their debt ratios, and just shareholder equity, shares outstanding, just seemed pretty good. Like a lot better than the other industrial companies I was looking at. So yeah, and they also just have more growth than a lot of industrial companies I see. So it's sitting at 5.85% gains. This is one that has been in the past, it has been the big loser in the portfolio. So it's cool to see that it's trading back up, and I'm actually starting to make money on it. And yeah, next we have Novo Nordisk, which is this is the only company I think in the portfolio that's not a US company. I think this one it's in Europe somewhere. I think it's in Denmark maybe. And it is a big pharmaceutical company, and they're known for like Ozempic and weight loss drugs, which have been really sort of driving growth recently. And I also see them as a very strong biotech company, and I'm just bullish on biotech in the long run. So it's a company I want to hold on to, and just the financials of it look amazing, and I think that it has a good growth path going forward. So really like Novo Nordisk. Next we have BlackRock. BlackRock is another sort of financial dividend paying company. It is just a really well established, it owns a lot of ETFs, and there's like a huge company that is just continually growing, seems really solid, and I just like the dividend that they pay, and I like the company in general. I think that they have a lot of growth going forward, and yeah, I'm just really bullish on BlackRock, and I like them as well. So this is one that's grown by about 12.5%. It's up a lot from when I bought it. I'm not like super buying into it right now, but I'm adding to it a little bit, and hopefully it goes on a dip so I can buy more. Next we have Target. Target is one where I initially bought because it was just on so much of what I saw as like a deal, because it was down like 50%, and I saw it as a very solid retailer, It's my favorite like big retail store behind Costco, which is also in the portfolio. And I just saw it at like a 14, I think it was like 12 to 14 PE. And I thought that was kind of a ridiculously low valuation. So I felt like I really needed to pick it up. I don't know if it's quite as solid as some of the other companies I own, but it was sort of just more of a valuation play for me. I just saw it at a really low PE, and that was the main reason I picked it up. Most of the time, though, I feel like most of these companies, I just kind of ignore PE and look more for just the highest quality companies. Like, for example, Nike was at probably a pretty high PE. It did trade down when I initially bought it, but it was still at a pretty high PE. Hershey tends to have, at least until its big dip, it tended to have like a 30 PE or something. A lot of these companies trade at higher like PE ratios because I think and the reason for that is a lot of them have just high quality financials and are just really solid companies. But Target was one where it was a low valuation buy. I saw it as just that sort of thing. And if I could only hold one retailer, it would be Costco. But yeah, that's why I bought Target. And next there's Regeneron, which is another pharmaceutical company. It's part of the trio pharmaceutical / biotech companies that I own: Regeneron, Vertex, and Novo Nordisk. All of them are just really good companies, and I'm sort of bullish on not really pharma, but more biotech related pharma. And these three seem to be in that biotech sort of, or at least branching out into that biotech sector. And all of them are just really amazing companies. You can see, 11.87% up, 15% up. Vertex is my best performing individual stock, 20% up. But yeah, Regeneron is probably my favorite out of the three. It's just a really good company, trades at a pretty low valuation. Usually it's around the market. It has traded up for me though, so it's probably a bit higher than. But when I was buying it was about like 20 to 24 PE, which is like in line with the S&P 500. Next we have Costco, which is my favorite retailer, and this one also is just heavily sort of always overvalued. It's always going to have like a much higher PE as long as it remains like this dominant sort of retailer, and there's not really that many good times to buy into Costco, but it's kind of one you still want to just slowly dollar cost average. It's just a smaller position for me. I'd love for it to trade down so I can make it a larger position, but it's just someone I'm going to slowly add to. And I mean, it's just a machine. It just keeps growing. It keeps getting more and more overvalued. I mean, it's kind of a hard company to ignore, and that's why it's in the portfolio. Next, we have Lam Research, which is like the one sort of kind of tech company in the portfolio. It is like a chip, or it makes it's kind of in that chip sector field. It makes semiconductors. It's comparable to something like ASML, which also makes like semiconductors. And it has performed really well. I think in terms of, it and Costco have the highest percentage gain in the portfolio. And yeah, this is one where it's more, I think it's less about the company itself and more that we've had sort of this bull run with chip companies and that sort of thing that's pushed all these companies higher. But this is one of the more solid companies in that sector. It's just really good growth, pretty low valuation, like all around an amazing company for Lam Research. And last but not least, we have Vertex, which I kind of talked about before as one of the trio of three biotech companies. This one is just another one I saw that just amazing fundamentals, great company, and that's why I bought it, and it's performed really well, so I'm happy with that one as well. And yeah, that's the companies, that is the portfolio. We're doing pretty well. Everything seems to be going up. We're about $2,100 in gains, about 9% or 9.7%. I'm looking forward to watching this portfolio grow and continue reinvesting the dividends and watching it compound and grow in the future. So I hope you join me next time, and I'll see you guys later.